the business plan by the investors. As I told you, the business plan, after preparing an effective business plan, you can produce this business plan to find the investors, the venture capitalist. Or else, if you want to draw from loan from a bank, you can produce this document. So the main idea is, at the end of this lecture, you will be able to understand the process of evaluating the business plan by the investors. How investors evaluate this business plan. What are the key points that they are going to raise from your business plan. How to accept or reject your business plan. The business plan, you know that the business plan is a written document, as I explained you before, defines goals of your business and describe how you will attain those goals. And this also I explained. Business plan is worth your considerable investment of time, effort and energy. I explained these things in the previous lecture. Business plan set objectives, define budgets, engage partners and anticipate the problem before they occur. Then who wrote the business plan? So normally, who writes the business plan? The researchers who have unique idea and that idea can be commercialized. So if the researcher wants to start up a business using this research idea, he can write a business plan to find the investor. Or the young ventures who do not have enough capital. You can find some young ventures, they have really fantastic ideas about the business, or else they are very good innovators. They innovate different types of product or services, and they want to start a business using that. In that, they can write a business plan also. The small industry which want to enhance the size, as I told you, the existing system wants to enhance the size of the business, that also they can write a business plan. Then after writing the business plan, consider that the investor or the young ventures or the small industry wants to prepare a business plan. The purpose of getting the capital. Some capital can be requested from the venture capitalist or else the banks. So to whom you give this business plan? Consider I will explain how to analyze the business plan by the venture capitalist or the investors. You give business plan to the advisors. Normally venture capital companies may have some advisors. So they provide you have to provide the business plan to the advisor. The venture capital company may have a set of venture capitalists. So the advisors read this document and give this book to the investors. The investors will go through this document, and some of these investors, not all, one or two from these investors want to meet you. Sometimes one person or many persons wants to meet you, and they said that I would like to meet you and discuss further about the business. And this is called the investor pitch. Then you have to make a presentation from your business plan to the investors who like to meet you. This is called the investor pitch. Then after you may have to do several presentations, and they will ask the questions, and unless you can answer that time, and you have to prepare the answer for these questions and provide the do the presentation once again. So there may have more than one presentations you will have to do for the investors. Then some one of them, or sometimes two, or the sometimes they the uh, some of them from that investors said that the great, send me your business plan and financial plan. Then after the presentation they request your business plan with the financial plan. They especially see the financial plan because they analyze that they can get the return on investment from your business if they invest the money. And the investor once again the meet all the partners and make the presentation uh, about this one. And after that, if after that one or more people would like to invest your business plan or your business, in such case you have a freedom to select to whom you want to give your detailed plan, or else you can discuss with all those them, and if they agree your conditions, so definitely when you get the investment from them, you will have to provide the equity is the ownership of the company. A certain percentage of the ownership of the company you will have to give to the investors. In such case you will have to discuss with them the percentage that you can provide. When during this discussion some of them agree with you and some of them will reject your percentages. So finally you can select one. So that's why due diligence may have some changes of the your business plan, and negotiate about the ownership as I told you, and provide the money or the fund for your project. This is the process. So but you have a doubt how they are going to analyze this business plan, what are the parameters they analyze. We'll see those things. So investor decision process, when you consider the investor decision process, they decide the market attractiveness and product differentiation and managerial capabilities. That's why when we are going to prepare the plan, we have to address these things: market attractiveness, that is market need, size of the market growth, access to the market. These four things they will see under the market attractiveness. And product differentiation, the uniqueness of the product lifestyle, profit margin, what are the value added things of the product if this is an existing one. And managerial capabilities means the team of the company, management skills, marketing skills, financial skills, and any other skills related to this managerial capabilities, and analyze in this way. And also resistant to the threats, whether what are the barriers to the entry, obstacles are there, downside risks are there, economic cyclic risks. Analyze the risks of the business, and from these two, the first two, they prepare the expected return. They analyze the expected return by giving some marks. Then from this they analyze the preserved risk. That this also there is a marking system, and they analyze this one. If the expected return is higher than the preserved risk, they are going to invest this company. If the preserved risk is higher than the expected return, the investors are not going to invest the product. So different investors have different marking system, almost same, but they may have some slight changes to analyze this, and they will analyze and they get the decision whether they are going to invest or not. If one investor this analysis is expected return is higher than the preserved risk, he is going to invest the money in that in your business. So what investors look for, that is, how does the team think, how detail oriented is the team, and how big the market, this market is, there sustainable competitive advantages, what is the growth of plan, and what does the technology roadmap look like, short term or long term play. And the key points to remember: general guidelines, clear, concise, professional. You have to write the document in the clear, concise, and professional style. Well researched and documented. When you are writing, you have to have a good research, and then after that you can document it. And consistent and cohesive. You have to write in a consistent way, and the business plans are very specific, not promotional tool, as well as spelling is. And also we have to key consideration, have a story to tell from this business plan, and be confident but objective and dispassionate, and understand the financial characteristics of the business, and avoid the promises. You never write the promises, and we can do likewise, don't write it. And these are the miscellaneous concerns, length 30 to 50 pages, so 25 to 40 pages also. Required appendices, financial statements, statement of startup cost, break-even charts, resumes of the employers, and use bullet points, tables, and small charts. And don't use the first person our format spelling count also. And remember that business plan is the specific plan to open a new business or to expand the existing one, not the writer's wishes or dreams. This is very, very important to understand. So then,